Hey there, my name is John Stevenson. Welcome to the Guarantee Retirement Guy Show. Today we're going to be talking about whether or not a fixed index annuity, a FIA, or a RILA is the best place to park your cash. Okay, so a RILA is not something I sell. I'll tell you right up front, those are registered indexed annuities, and those are sold by advisors, and they have market risk. Okay, so typically for those, you just get to share in more of the market returns, and then you're limited to like maybe 10% losses. Okay, so those are not something I sell because you have to be a securities advisor to sell them. But the fixed index annuities I do sell because those guarantee that you will never lose a dime due to market risk because you're not in the market. Okay, they're buying call options associated with the market. So with the RILAs, you're sharing in some of the losses with the insurance companies, and of course in return you could get to share in more of the returns. With a fixed index annuity, you share in zero losses, and you get only upside. Okay, it may not be as much as a RILA will give you, but it's only upside. So it's just a stair step. Okay, no roller coaster whatsoever. So in my opinion, if you've got a 401k or an IRA and it's been sitting in the stock market for a long time and things are up more than they've been in the last couple of decades, and you're thinking, I would like to just take advantage of all the growth that I have and all the gains, and I want to protect it. I want to have some more growth, but I still want to protect what I have. Then a fixed index annuity would probably be one of the best options out there when you're looking for indexed growth and also 100% market protection. I'm going to share my screen. I'm going to show you exactly how this works. All right, so this is someone, they're in Iowa. It's $500,000. This will be very similar to any other state. If they take lifetime income from this product, they'll get $41,000 a year. Their balance will run out after 15 years, but their income will continue for the rest of their life. If you're not looking for guaranteed income, then we're going to be looking at the fixed index annuities that will pay out, that will give you a lot of growth, but also 100% market protection. Now, these income annuities, they also provide the same thing. Okay, so that's why I'm showing this just in case you are looking for lifetime income. If you are looking for that, there is a link below this video. You can go directly to my calendar and you can book a call with me there, and we'll chat about what you're looking for. Otherwise, go to my website, johnstevenson.com. You can look at my annuity calculators, use the income rider calculator if you're looking for highest income, and then book a call there if you so choose. So for income annuities, though, they're great. I mean, you can see from this, I'll get $61,000 for the rest of my life. And so this is based off of being 65 years old, putting $500,000 in and waiting until 70. So you can play with my calculators and whatever your circumstances are, it'll spit out the numbers. Okay. So let me just show you real quick though. I want you to see that this does not lose money due to market. It does earn some, but again, it's a income product. It's not a legacy product. Okay. It's not a growth product. So here's what it looks like if there's no growth. You can see right here, the balance is gone by the time you're 77. You can see the balance here goes down a little bit because they're charging you rider charges right here. That's for lifetime income. Okay. If I were to go down here and look at growth, it'll give you some growth, not much, but eventually over time, it still runs out. Okay. It is not made for a legacy. I mean, if you die early, it'll go to your beneficiaries for sure. But essentially, you're paying $500,000 to purchase a $1.6 million pension. That's what you're doing. Okay. So let's go over to growth though. So if you're just looking to kind of protect the money that you've already amassed inside your 401k or any other account, maybe it's a TSP or 403b, then a fixed index annuity is a good solution for that. You just have to pick the right one. So let me go over here and I want to look at growth. And there's a lot of different options out there. If you've talked to any advisor who's trying to sell you an annuity, then I'll just show you. There's so many out there. See, in this page alone, there's 2,500 options. Okay. So a lot of times they'll sell what they know, or they'll sell what makes them the most commissions, and they hope they never hear from you again. And I hate to say it, but I just say that from experience. There's so many people that reach out to me that have been sold annuity products that can't get a hold of their advisor, and they're trying to get my help to help them get out or help them make sense of what they purchased. I even had a lady reach out to me yesterday, and she was like, I told him I didn't want an annuity, and he sold me one anyways. I didn't even think I was buying one. Like it's somehow, I don't know how he pulled it faster, but somehow he was able to sell her $800,000 worth of annuities that she didn't want. So if you're going to buy a fixed index annuity, buy it with the right carrier and buy it with the right index. Okay. That's really, really important. And there's only about 6 to 8 carriers that I recommend for growth, index growth. Okay. There's different ones that I recommend for income, different ones I recommend for MYGAs, which are just like CDs. Okay. It just depends on what you are looking for. But if you're looking for index growth, I'm not going to throw you into something that's going to pay me a high commission and give you a low growth, because a lot of times that's what people will do. I'm going to show you first the ones that have the highest participation rate, the highest cap rates, and also have a high renewal rate history, meaning every year they renew their rates, you're going to get at or close to what you got before, right? That's really, really important. I don't want to show you something that has 60% participation rate and then it drops to 10% the year after. Like, I don't want that to happen. So when I'm illustrating these, I am showing them from companies that have that renewal rate integrity. Okay. All right. So let me just pull up. Let's see here. I talk about Lincoln all the time, so I'm going to pull up another one. I'm going to pull up Delaware. Lincoln's great. One of my favorites. So is Equitrust. And so is Delaware. They all have high renewal rate histories. So we'll say here, S&P 500. And we want as much growth as possible. They got caps at 11%, 10, let's see, participation. All right, so let me just pull this up here. So the goal with the participation and cap rate is to give you as much growth as possible, but they're also limiting the growth because they're buying call options. And so when the market is down, they can't exercise those call options. They might have spent $1 billion on call options and now they can't exercise them. So because of that, when the years are good, they have to limit what they give you. Okay. And so that's just the cost of protection, but you're still getting some decent growth. So here's what 500 grand will look like in a down market. Okay. If there's a bear market and you decide to take your money out of your 401k and you protect it, then it's not going to do anything. It's not going to go down, which is great because you're not in the market. But if we have, some years where it's down and up, you can see the down years are zero because you're not losing anything. But the up years, they're going to exercise their call options and they're going to give you some growth. Okay. And you can see here, they're not giving you all of the growth on the market. I mean, for Delaware, what are they giving you? They're giving you half of it, half of the S&P 500. So basically what we're looking at is this year, the S&P did 29%. What are they giving you? 14.44. They're giving you half of it because the year before they lost money, right? They didn't make anything. And so they're not giving you as much growth as you would in the stock market. But at the same time, you're not participating in any of the losses. Okay. So if I go down to 10 years, this has grown to almost $1.1 million. Okay. Definitely will make more in the stock market as long as the stock market behaves, right? But if you have a few years where the market's down and we have a recession, then you won't be so happy. So it just depends on what you're looking for. If you're looking for protection, the right indexed annuity can really help you protect your money and get some decent growth. You can buy a RILA. A registered indexed annuity is not a bad product, but you have to realize you're not protected all the way from market risk. You are participating in some of the market risk. And in return, you get to participate in some of the returns. I don't know. In my opinion, it's better to compartmentalize and say, all right, I want highest returns possible. So I'm okay with some risk. So put that then in the stock market if you're okay with that. And it's easier to be okay with that if you have a portion of your money in guarantees. Maybe it's guaranteed income. Maybe it's just a fixed index annuity without the income rider, and it's giving you lots of protection, right? You get 100% protection, but maybe you don't get as much growth as you would in your stock account. But you're okay with that because you're protecting what you have. Okay, you'd rather have a stairs going up, flat years and then up years and then flat years, and better than going down and then going up to recover what you lost and then making more on top of that. Like it's just a nicer ride. So it just depends on what you are looking for. I mean, I'd love to help you purchase an annuity if that's what you're looking for. If you're not, that's fine too. But hopefully this video is helpful. You'll notice if you go through my other videos, I got hundreds of videos that answer so many different questions about annuities. I would definitely encourage you to watch my videos. It will help you and educate you and help you decide kind of what you want. So some people, I would say most people that reach out to me, they want income. They want guaranteed income. They want the highest income. And so typically they'll look at the income rider, and I would just say, go to my website, johnstevenson.com, and go to my income rider calculator, and it will show you what the highest guaranteed pension payout is. If you're looking for just growth from an index, then just book a call, because there is no way for you to go on my website and just go through all these indexes because they change all the time and I'm just not allowed to show them. So I'm not allowed to illustrate them directly on the website for you to just to search around as a client. So what I would recommend is go to my website and book a call after checking out what the payouts are if you're looking for income. Otherwise, if you just want help with the highest paying fixed index annuity, you can book a call with the link below this video, or you can go again to my website and do that there. So hope this is helpful. I'm just trying to share everything that's available and how these work. There's a lot to know when it comes to fixed index annuities, and that's all I do. Like, I work with over 70 carriers. I work with over thousands of different products and variations. And it's really important to me that when you're looking for either growth or income or both, that you're being shown all the options, regardless of what the commissions are, and that you're able to make the decision for yourself, going in eyes wide open, knowing exactly what you're going to get, knowing that you've been able to go through all the options, and knowing that you've been able to make the best decision instead of just being pushed a product. So anyways, hope this helps. I really appreciate you for watching. And if you like the video, like, subscribe, share, comment below, and we'll see you next time.